Next, we have Alan Konevsky from tZERO. He will provide his insights into the evolving tokenization landscape and its integration into global financial markets. Let's welcome Alan.
Terrific, Augustine. Thank you. Good to see you, and thank you for inviting me to speak. I'm Alan Konevsky. I'm EVP and Chief Legal and Corporate Affairs Officer at tZERO. I know we're running behind. I'll spend a few minutes catching up on some of the regulatory themes from the excellent remarks that our CEO, David Goon, delivered earlier this morning and on the preceding panel, which I thought was terrific. tZERO, as we discussed, was started out as a company with two themes in the marketplace. Theme number one, that blockchain technology, not just the distributed ledger piece of it, but particularly the smart contract automation piece of it, can introduce significant improvements into the securities industry and deliver increased transparency, reduced intermediation, and therefore reduced costs, faster settlement and other times, as well as, and this is a point that someone made in the prior panel, greater inclusion into the financial services ecosystem for those who historically have been on or underserved by the industry. The second theme that tZERO had was that a lot of the digital assets, excluding Bitcoin, Ether, and potentially some others, but a lot of digital assets are most likely securities under the law as it is in the United States. It's a different question from what the law should be, but the law as it is should lead you to the conclusion that a lot of these projects constitute securities, whether they are native digital assets coming out of a number of layer one projects, or whether they are tokenized real-world assets or other types of projects. And therefore, tZERO's perspective was to organize an efficient marketplace that would support these assets. Now, a marketplace, like any others, means three things. It means supply, demand, and infrastructure. Let me talk about the last piece of it first. And that's where tZERO is invested in the most. We focused, of course, significantly on our tokenization technology, which is largely platform agnostic. Although, when we are hired to tokenize assets, we generally use an ERC-based set of tools. But with respect to the kinds of assets that we can become interoperable with, we're largely technology agnostic. But most importantly, we focused on setting up regulated infrastructure. And given the perspective that most of these assets belong in a regulated securities environment, we invested in corollary assets. That means a broker-dealer, or broker-dealers rather. As we talked about before, the United States has a somewhat inefficient perspective, somewhat chaotic, and people might say schizophrenic perspective on how you treat regulated assets in the securities ecosystem. On the one hand, certainly over the last 4 years, you've had this SEC and this SEC leadership taking the position that a number of these assets are securities, and they've been relatively public and aggressive in both their positions, but also in their enforcement actions, where effectively they were regulating industry by enforcement by commencing litigation against large and small industry participants, alleging that they're engaging in securities business without a license effectively. So that was relatively clear. Now, a lot of industry participants disagree with that approach, including us, and we're generally secular believers that securities principles and securities infrastructure is going to be an important part of digital asset development in the United States. But the way to achieve that is through positive regulation and rulemaking and guidance, as opposed to after the fact regulation by enforcement. And that, that was sort of the downside of it, is that it's not enough to tell the market these things are securities. You have to give a path for the marketplace to be able to accept these assets as good securities, accept them into a broker dealer, and offer them to clients. And so that was sort of the split personality part of the world we've been in. On the one hand, we're being told everything is a security. On the other hand, we're being under-equipped with tools that you need to create efficient infrastructure in the marketplace. And that also feeds into the proliferation of the types of entities. As I said, one broker dealer is not enough, because while you could have a broker dealer that operates a marketplace, so-called alternative trading system, which is really a mini exchange or a marketplace that operates based on an exemption from a requirement to become an exchange, which is obviously a very onerous process that really only makes sense for public securities, of course. But it's not enough to do that, and it's not enough to have a broker dealer that can open up customer accounts and give customers a gateway to a technology-enabled gateway to access securities that trade in the marketplace. Custody is a really important issue, and no traditional broker-dealer is permitted to custody digital asset securities, notwithstanding SEC positions that these things are securities and can only exist in this ecosystem. And the only pathway that the SEC came up with to allow a broker-dealer to custody digital asset securities was to become a so-called special purpose broker-dealer. Now, generally, it's a fairly unique perspective where the SEC creates a legal construct that's only limited to a single business activity. Monoline businesses generally don't do well, and where possible, from a risk perspective, it would be far more appropriate to permit existing broker-dealers to open up a new vertical for digital asset custody. Much how existing broker-dealers, including ATS operators like us, can quote digital asset securities for trading, so long as they're custodied somewhere else. And in the past, somewhere else meant under other pieces of this sort of disjointed SEC guidance, either with a bank or in the user self-hosted wallet, which creates a very complicated operational framework. So the special purpose broker-dealer was a very welcome relief to providing a more seamless user experience and operational framework for how you can take in, custody, trade, settle digital asset securities, which would include, as I mentioned before, tokenized projects, but also crypto securities, to the extent there's a path that the SEC provides for how a broker-dealer can get comfortable with due diligence and take them into custody. And a special purpose broker-dealer provides this end-to-end self-contained environment for a broker-dealer to manage the life cycle. Now, as a footnote, we recognize that the end path of tokenization, the end path of blockchain, is, of course, increasing disintermediation. And that's a really important theme, where you are building public infrastructure, a digitally native technology layer supported by self-regulating smart contracts that represent securities or other items of value, that allows users to access these items of value as directly as possible in the way that is transparent, self-regulating, as I mentioned, inclusive, faster, and cheaper, the way internet did to data and voice. But that is a longer-term project, and we have believed that the right way to get to that end state, whenever it becomes appropriate from a political and regulatory perspective and market infrastructure perspective, is to equip traditional market participants like broker-dealers and transfer agent, which we also have a license, to interact with a digitally native environment and to deploy products that leverage the unique features of digitally native assets, including smart contract automation. And as we do that, we think for the time being, it is efficient for all these aspects, including custody, to sit inside a brokerage ecosystem. But in the United States, for now, it means that if you want this self-contained experience, you need a special purpose broker-dealer. And that's the other piece that we've added. It was a 3-year regulatory odyssey. There are only 2 of them in the United States. And we believe that we are going to be the leading provider of these services at scale for tokenized projects. And to the extent that crypto securities end up migrating into regulated securities ecosystem. And again, this wasn't really achieved in over the last 4 years, and the direction of the next 4 years still remains to be plotted out under the second Trump administration and the leadership in the various agencies that are going to follow. But that's the infrastructure ecosystem that we've been building out, and tZERO is uniquely positioned to provide not just secondary trading for digital asset securities, not just brokerage access to that trading environment that is transparent, organized, and compliant, excuse me, and that can be curated in a number of ways, whether to mimic public style continuous automated trading or other trading modalities that seek to target different outcomes and different procedures, whether it's an auction or a request for a quote or request for proposal or a block trade. But we can also deliver safe and secure custody of digital asset securities using industry-leading wallet management and security technology that we've partnered with Fireblocks on. We think that is a competitive differentiator for end-to-end digital solutions in the private markets. As we continue to perfect the infrastructure in the industry, we of course are focused on supply and demand, and folks talked a lot about that in the last panel and beyond. Again, on the supply side, and I'll focus on real world assets for a second. Under the law in the United States as it is now, tokenization for most real world assets would usually mean securitization. That is, tokenizing doesn't necessarily deliver a unique and less regulated asset class in the United States. Other jurisdictions are different, and I'm sure those topics have and will be covered. But in the US, generally, tokenization of real world assets means securitization, and therefore you are creating a digital asset security, and a lot of the real world asset projects live in that space, and that's a space where we can deliver end-to-end services from brokerage and custody and technology, transfer agent services, if they're appropriate for the type of security that's involved, and it's not always appropriate for digital asset securities that are custodied by a special purpose broker-dealer, for example. But it depends on a transfer agent. But that's tokenized projects, because in the United States, it in most cases means securitization is an important part of our focus, whether it's real estate, art, revenues associated with a range of activities, or other asset classes. Demand, of course, is another important side of the equation, and most marketplaces powered by an ATS will generally operate as a relatively simple matching environment where buyers and sellers get matched depending on order parameters. And we offer a wide variety of order types that can be submitted, but generally it's a matching environment. And of course, these are nascent developing assets. These are private assets, and therefore liquidity is a key concern, including providing more institutionalized liquidity services under rules as they were deployed under the current SEC. That probably means that somebody's operating as a dealer, and it probably means that it needs to be a broker-dealer operating in that capacity in providing these types of liquidity services. And it's something that we've been very focused in exploring as well, whether directly or through partners, because while there's a bit of a catch-22 dilemma between supply and demand, We believe supply wins. No one was walking around in 2005 and saying, gee, I wish I had a smartphone. Apple brought out a smartphone and the market developed. But demand is important insofar as two things. One is supply will bring more demand with it. There's a virtuous relationship because as you bring a new asset onto the platform, that brings its existing investors with it and therefore multiplies the number of eyeballs that have on your other assets. And the other part about demand, of course, is liquidity. And including institutionalized liquidity, and that's something that we're very focused on from perspective of providing appropriately economically incentivized actors to play a market maker or a liquidity provider role. And of course, the pie needs to grow before in many cases it becomes economically attractive for a traditional market maker to operate in this space. But there are other ways to deliver that liquidity in more curated security by security environment. One observation that comes out of everything that I've said, of course, is that we are US focused. That doesn't mean that we only cover US investors. While we are a US broker-dealer, we have developed a path for how we can support investors from a range of jurisdictions on reverse solicitation basis in compliance with local laws. David Goon mentioned before, and he's absolutely right, laws outside of the United States matter as much as laws in the United States. People often forget that. They have this sort of buyer or seller beware theory. Up to you to comply. It doesn't work this way. If you're an issuer or a broker dealer like us and you touch non-US investors, you better be prepared to comply. And if you're not, you're going to be in violation. It's, again, as important as US compliance. And we've invested a lot in that space. There are dozens of countries where we can touch securities on passive reverse solicitation basis, and where we can't, we explore local partnerships. They may involve joint ventures with locally licensed participants who can provide retail level financial services and distribution in the country. They could involve us exploring our own localization through licensing and on-soil presence where required. And in many cases, it is, you certainly need locally licensed personnel, if not physical presence. And in some cases you do. But that is an ongoing focus because, again, if you think about the end state theory of what we're trying to achieve and to replicate what intranet did for data and voice, you need finance without borders. Financial services is a highly balkanized industry globally for good and bad reasons. And as we continue, and people talk about breaking down borders, that sounds violent. I think what we're trying to do is we're trying to address concerns that really straddle borders. Every country generally wants to protect its investors. It's a good thing to do. It's the right thing to do. We believe technology can achieve that, and in a way, including for smart contract automation, that can address concerns that regulators have from country to country. Now, in some places, these laws have sort of a protectionist element to it, and that's a more difficult thing to challenge with a set of technology and a set of infrastructure that is meant to deliver inflation protection, cross-border remittances, and other tools that are important in a range of countries, probably more important in the developing world in many instances, including from hyperinflation protection and remittances, than it is in developed world as compared to existing financial tools that are available to most people in developed countries. Not all, but most. But certainly the global focus is important for us. As I'll finish with two other observations. People tend to ascribe a lot of the challenges in this industry, including in the United States, to politics and regulation. That's very fair. This was a very crypto-favorable election. I think crypto lobby deployed a lot of voices and a lot of dollars to support politicians, including in the incoming Congress, in the incoming White House, and the agencies that are going to be staffed by the executive branch that are receptive to the themes around innovation and the severe political and regulatory inefficiencies that we've been dealing with, whether in the security space, whether in the banking space through aggressive debanking. It's not just perception; it's reality of the crypto and tech industry in some cases. But that's not the end of the explanation. The industry also needs to focus on product, and product that really explains to the marketplace the benefit of blockchain technology, the benefit of digitally native infrastructure layer that's powered through automated and self-regulated smart contract technology. What does that mean for investors? What does that mean for users, as opposed to just something that's largely duplicative of conventional instruments? Now, that might be step-by-step approach, but you got to articulate a product vision better, both at a retail level, kind of the macro level for the industry, and also from kind of niche procedures and processes in the industry, whether it's automation of certain back office processes such as collateral management that certainly folks have been doing wonderful progress with, or others. And so it is up to us to communicate better and build product better that tries to position digital assets for what they were, whether they were really efficient mediums of payment, whether they are securities that deliver utility functionality that wasn't available before, greater transparency for the issuer so that space between them and their investors can be closed up and they can interact more closely as opposed to through layers of intermediaries and custodians. And to some extent, to a significant extent, that also involves boxing in some of the downsides, some of the legacies of crypto for blockchain technology penetration in a number of industries. Again, crypto elevated the conversation about blockchain. That's terrific. Came rightly or wrongly with reality or perception of baggage around AML and other types of risks, and we need to continue to address and box that in better because it certainly has poisoned the public dialogue. But hopefully, again, with the new proactive representatives we have in the United States, certainly we will continue to, at a minimum, have a benign environment for innovation in the United States that steps down some of the aggressive rhetoric and regulatory actions that we've seen in the last number of years, and potentially also architecting of new rules, whether on a micro scale or on a broader architecture that will redesign the industry over time. I appreciate this time to address you. Thank you.